All down. All silent. Going. Go. So congratulations.
Welcome to the Current Market Insights podcast, brought to you by Harris Partners Real Estate. Each episode, we chat with real estate author and industry leader Peter O'Malley to discuss the current property market conditions and provide insights to assist you on your property journey.
Hello and welcome to another episode of Current Market Insights. As always, I'm your host, Kieran O'Brien, and with me again this week is my good friend, Mr. Peter O'Malley. Peter, hello.
G'day, Kieran. Great to see you.
Great to see you, Peter. Want to kick off this week. I caught Dot & Crossett's weekly email. They're a conveyancing firm, as you know, and they touched on this week the issue of deceased estates and disclosures for agents. I wonder, have you read the article or the email, Peter? And if so, have you got any thoughts on what they had to say about the topic?
Yes, I did catch the article, Kieran, the email. Deceased estates, they always a good deal, was their lead, and they refer to the way agents market deceased estates. And there's an insinuation there, I think, when real estate agents talk about deceased estates, situations, must sell, owner bought elsewhere. There's an insinuation to the buyers that a bargain's there to be had.
So I must admit, before joining real estate, I would have been of the impression that a deceased estate probably was a good opportunity to buy, assuming, they might not be as concerned about price or, it may just be something they need to do, as you say, forced to sell. And I since have got the impression from joining the industry that, in fact, it really is a tactic used by some sort of less scrupulous agents out there. Do you think in your, much longer experience that it is something that's employed by agents?
Thankfully, the marketing of deceased estate in the copy and as the lead feature of a sale has diminished over my time in real estate, Kieran. It's a low-rank marketing tactic. There's no doubt that some agents will still use it as a lure to try and wheel people in to the auction day. Look, this is a deceased estate. The beneficiaries want their money. It'll be sold on the day. If you're not there, you miss out. You could get it at a good price. So I think there's different ways that it is used by agents to entice buyers forward. But at the end of the day, I've never really dealt with clientele who have taken the view, this is a deceased estate, we didn't pay any money for this property, therefore we don't really care what it sells for. If you're the beneficiary of a property from a loved one who's passed away, what I find with most executors and beneficiaries is they feel duty-bound to get the best commercial outcome for the property because it's a gift and a legacy that's been left for them by their departed loved one.
Fair points. You touch on there the idea that you have seen limited occasions and certainly less so in recent years of it being used as a lure. Where would you say the line is drawn between it being a marketing tactic and a lure and just a case of agent disclosure for the sake of, being really transparent with the buyers in the campaign?
It's pretty obvious on the contract of sale in New South Wales if it's a deceased estate, not always so, particularly if it's been transferred into the executor's names. But if it's being sold prior to probate and the settlement of the sale is subject to probate, it's pretty obvious then it's a deceased estate. And some buyers will ask, both for interest purpose and religious purposes, is this a deceased estate? And if the agent is asked point blank if it's a deceased estate, they're probably duty-bound to answer that straight, that yes, it is, or no, it's not. But that's a yes-no answer. That's not, yes, it's a deceased estate and the beneficiaries are really keen to flog it off, so just turn up and make any sort of bid on auction day and you never know how lucky you'll be. So there's big differences there, the way agents communicate the fact to the marketplace.
It certainly wouldn't be the first occasion where agents have used some creative language, communication tactics, whatever it might be, to entice buyers to come and see their property for a bargain.
Well, look, Dot & Crosset are a law firm who specialise in conveyancing. They're pretty big in the conveyancing space, and it's a good topic that they've raised here. It's actually in my first book, Real Estate Uncovered, about what a low-rank tactic, disclosing the vendor's motivation when they're under some sort of duress or it is a deceased estate, really is. And over the years, we've seen situations, the couple are getting divorced, they just want out, they're in financial difficulty. There's all sorts of instances and examples where some agents will compromise their vendor as a way of encouraging buyers to attend the auction or come along and make a bid. And then there's professional agents as well that would never dream of doing such a thing to their clients, who at the end of the day are paying them a substantial sum to sell the property. So as a buyer, I guess you kind of like dealing with a real estate agent that might tell you a little bit too much. As a vendor, you should, avoid that agent like the plague.
No, that's certainly good advice, and I think we've touched on the podcast, and you have in your book certainly many times the premise of finding a good agent and getting someone who is a good communicator but is also looking to serve your interests. Just as we sort of move on a little bit, I wonder, just thinking about this and thinking about some of the intricacies involved. If you are listening, if you are out there and you've seen marketing like this and you're not sure whether the disclosure is actual or whether it's just a bait kind of pricing system, are there any pitfalls or any things that you should look out for to make sure you're not getting hoodwinked? Any obvious signs?
Look, I think you should never go into the property market looking to trade off other people's duress. And if you do, karma will come looking for you. The amount of buyers that will ring us up as agents and say, have you got any bargains? Look, the only things that sell at bargains are items or properties that no one else wants. So if you go to David Jones during the sale, yeah, sure, there's lots of things that are marked down, but they're last season's stock, and it's the stock that no one else wanted. That's why it's marked down. There's a great saying in real estate that the best properties are least negotiable. And I've never had much time for buyers that do try to trade off vendors' distress, and that's probably inbuilt in me because for the vast majority of my career, I've been a vendor's agent, not a buyer's agent. And if you're looking to purchase good real estate at fair and current market price, growth will take care of itself from there over the long term, as we've seen in Sydney. And the way the Sydney market's going, okay, it's got some short-term gyrations and challenges, but I think long-term the Sydney property market is just going to continue to go from strength to strength. The way this country and this city's going, you don't need to go out and take advantage of someone because they're in a vulnerable position.
Absolutely, and I doubt anyone out there would want anyone taking advantage of them when the time comes that they also need to move their property on.
That's where I say karma comes looking for you.
Certainly does. Speaking of the Sydney market, I wanted to just have a short chat today, Peter. I feel like we've been hitting people with data and stats so frequently recently that I don't want to burn any of our listeners out, but it is important to touch on what is happening in the market. So if you can, give us a bit of a sense of what's happened this week in terms of, what's the data saying from our usual sources and what have you seen individually?
Look, coming from SQM Research that we find to be the best data provider on the auction clearance rate, they're calling Saturday an auction clearance rate of 59%. That's a good solid number because they've factored in all auction results there, Kieran. There's two standout numbers from the data from SQM Research this week. For the first time this year, the number of properties sold prior to auction is higher than those sold at auction under the hammer. So of the successful auction campaigns, 251 sold prior and 222 sold at auction under the hammer. 113 were rescheduled. That's a lot. That's a lot when you consider it's 113 of 805 scheduled auctions. There was 186 re-advertised for sale by private treaty, and 14 of those were just straight out withdrawn before the big day. So what we're seeing, when you see withdrawn 14, rescheduled 113, there's a greater propensity from the agents at the moment to reschedule the auction than there is to run it at auction and withdraw it. And what the agents are looking to do there, we spoke about this last week, is too much stock came to market early in the year and it was competing against each other. And what the agents are doing is they're not seeing the same wave of listing activity behind this first surge of listings. So they're rescheduling their auctions, trying to flatten the curve out and sell these properties off in an orderly fashion, if that makes sense. So the properties that are selling are getting reasonable results. We had some great sales ourselves in the last 2 weeks. The prices were healthy and we started the year with really, really healthy stock levels. But as that stock sells off, we're not seeing it necessarily replace at the same rate that it came to market to at the beginning of the year.
So a couple of things to touch on there. One of the things that really intrigues me is we talk about these stats and we talk about how, in this particular scenario this week, roughly a third were either rescheduled, withdrawn, or pushed to private treaty, so away from the auction model. And of the ones that did go to auction, more than 50% of those sold prior to the auction, as opposed to under the hammer. So given that we see such pronounced shifts or movements in the way the properties are selling, why is all the commentary I see, not just from news media, but even, forums, commentators, people I talk to, punters, everyone seems to think the auction market is so hot, it's so amazing, it's the only way to go as a buyer or a seller because it's just so frenzied.
That's because what the real estate agents and the media want people to believe. And the reality is that the auction system, when it's in full flight, is open and transparent barometer for everybody to watch and see how the market's performing. But you're absolutely right. There was 805 auctions scheduled on Saturday and only 222 sold under the hammer. So you're talking, an auction clearance rate under the hammer of 25% there. But you wouldn't know that reading the Sunday morning newspaper.
No, well, that's exactly right. I mean, looking at Domain's stats as an example, they put the clearance rate at 72%, which if you're an average person out there reading that without the kind of critical appraisal required to go through and look at the data more deeply, that sounds fantastic. I think of selling, I say, well, 75% of homes are going. Of course I can be one of those.
In fairness to Domain, anytime they quote such numbers now, they tend to bracket it and highlight the fact that it's a preliminary number. But whether people are conscious of that as they see the headline number of 75% remains to be seen. Domain do now update their results later in the week. But by that stage, people have moved on with their working week. They're not really interested in last weekend's auction clearance rate necessarily. And there are a lot of people that we're running into in the market that are highlighting to us that they're seeing price discounting of properties that are going to auction as the agents are trying to sort of compete against each other on an underquoting basis to get the buyers attracted to their respective auctions. Auctions are getting rescheduled, as we've discussed. So there is a case of a little bit too much stock on the market at once, and it's competing against each other a little bit. And I think it'll clear in an orderly fashion running up to Easter, which is, now sort of 5 weeks away. Remarkable to think that we're so close.
Don't remind me.
And then coming out of Easter, we're staring down the barrel of running into the winter market, which is always a time for tight stock levels. So unless there is real mortgage duress out there that continues to force people to the market against their natural desires, it looks like stock might tighten from mid to late March onwards. And buyers that are complacent about the sort of slightly elevated stock levels at the moment might not want to be too cute because they might miss out and be waiting another 6 months for the spring stock.
It certainly highlights to me just that sort of wave nature of real estate. There's constantly, we're commenting on, it's a great buyer's time because there's an excess of stock and all of a sudden it can turn on a dime and they've been a bit cute, they've been too coy, they've waited too long, and all of a sudden they are in the majority and there's no property for them. You've touched on they may be facing that. You also mentioned that there's less listings coming through than you thought there might be. Do you have a bit of a sense as to what the major driver is for that?
I just think there was a lot of people that missed the boat getting to market late last year or had made decisions over Christmas, which happens a lot. So of the two or three of the sales that I've made so far this year, if I spoke to those respective clients in December about selling, they were not selling. And by mid-February, they'd been on the market and sold.
Yeah, wow.
So decisions get made around the kitchen table over Christmas as people discuss things and their affairs. And some of those sales that I refer to were the family residence. Others were investment properties that they just elected to let go for whatever reason. So, coming back from Christmas holidays, I had a wave of listings that just got signed up for January. It's like, wow, maybe we're off to the races here with all this stock, but that stock's gone on to sell and we're not quite seeing the same replacement surge coming through as what we saw in early January. There's good listings coming through, but it's just not that New Year wave that we experienced in January.
Just not the same energy. So with all of the things that you've talked about today, would you say that if you are a seller at home, a little bit on the fence about what to do, because you've read some of the media, you feel like you may have missed the boat, whatever, given that we could be facing a scenario where stock is tightening, Would that suggest that if someone is on the fence and has a potential need to go, it's not a bad time to start the process and potentially capture the last tail of that wave?
I don't think vendors need to be in fear of this market, Kieran. Yeah, like some of the vendors that were in those failed auction results, they can all sell, every single one of them. They might not quite get the aspirational price they're originally looking for, but there's a sale for any vendor with a good property out there at the moment. Should a vendor go to market or hold off, that is also dependent in the context of their personal circumstances, that's for sure.
Yeah, look, really good advice, Peter. As always, a great market wrap and a really interesting topic to start off the podcast. I hope everyone who's listened has enjoyed today's episode and found something useful out of it. And for you, Peter, I thank you again for joining me, and I look forward to chatting with you next time.
Yeah, likewise. Thanks, Kieran.
Thanks so much for listening to Current Market Insights. We'll see you next time.
Thanks for joining us on the Current Market Insights podcast, brought to you by Harris Partners Real Estate. The podcast providing real estate insights you won't find anywhere else.